truth training, actually being in the class, every class kind of takes its own direction, but all of them, the experience, the ability to ask questions to people who've been in the business for many, many years. We've got seasoned veterans who know what it's like. They've been through it. There's no reason for the new people to have to go through that same stuff. And the way to get around that is to be able to be in a room with like-minded people. And most of the people involved with truth concepts, with prosperity economics movement, they're all willing to share. They're all open. They want new people in the industry. And the result is a lot of those younger people, if they'll take advantage of the knowledge that's in the room with the older people, can bypass a lot of the heartache and a lot of the difficulties. We're going to talk about some stuff with the videos, but it takes that piece out of there. So this is not a substitute for going to class. It's a whole different experience being in the room with those people.
Todd, we broke down the 5 different financial calculators, and when someone is understanding that, I think I actually made the comment that this is like the engine that runs everything. So when we're looking at the financial calculators and seeing how you break that down, what are the most important things as it relates to understanding financial calculators?
Yeah, so the financial calculators are such an important piece of the whole system, even though they're very simple and very basic. And one of the things we want to remember is, in order for our clients to understand what we're talking about, we want to give them the easiest, simplest answer as we can. That covers the entire answer, but doesn't complicate the issue. And I think oftentimes in our industry, the idea is let's make this as complicated as possible so we can get our client to do what we want to do. And sometimes I guess that works, that people do it because they don't want to look dumb and they just go ahead and do it even though they don't understand it. But I think that's really the wrong approach. And what we'd like to do is only use what it takes for the client to be able to understand what's going on and actually empower them to be able to do it. So the financial calculators are some of those tools that don't have a lot of moving parts, and they're easier to understand. If they will solve the problem, then that's easily the go-to place. They're not any different really than a handheld financial calculator, an HP 12C or the TI financial calculator, or any of the other ones that are out there, except that it gives you all of the numbers on the screen where the client can really stay connected to them. It's important. The thing about the financial calculators too is that really all of the other calculators are based on those basic 5 concepts. Really, you just have 5 moving parts overall in the financial world, and that's going to be future value, present value, payment, interest rate, and time. And really, all of the other calculators are just multiples of those types of calculations. So how banks make money is really it's using the interest rate calculator to explain how interest rates work. And that is one of the big pieces, I think, in our industry. Really, people in our industry don't even understand fully, most of them, how interest rates work. So it's really an open door to take advantage for the financial institutions to be able to take advantage of the consumer, because there's no way they can understand how interest rates really work. And so this is a great tool to show if you can see how banks make money and they make it through the differential in interest rates, then it can help the consumer see how interest rates affect them and allow them the ability to be able to take advantage of that same strategy. Sure. So the internal rate of return calculator, I mean, if you look at it like this, it's really a rate calculator with variable payment structure. So rather than with a regular handheld rate calculator, all you can do is calculate based on a payment being the same throughout the entire time frame you're analyzing. With the IRR calculator, it allows you to vary the payment in every year, so you could have a different payment or every month and actually see what the internal rate of return is. Sure. Well, the cash flow calculator is really used for anything. It's fairly simple. It doesn't have a lot of moving parts. So if the financial calculators won't handle what I want to use with a client, then typically I will go to the cash flow calculator next. That will be the next one that gives me a few more items like tax brackets and some management fees, but still fairly basic and still fairly simple. We do have the ability to calculate the present value of a stream of unequal payments, such as for human life value or education or other things like that. So it's very key for that. Yeah, well, yeah, the education cost calculator, unfortunately, education is a cost, but it's a huge cost that most people have no idea how much it costs. And I think with this calculator, it's not to say don't get an education, don't pay for an education, but it is to say understand what it is and make it make sense. In other words, if you're going to spend that kind of money, do it in a field that is going to reward that at the end. And I think the issue too is the children of the parents need to see this as well. They need to know how much their parents are paying for school, and I think maybe it would cut out some of the playing around in school and realize this is serious because it's serious money. Yeah, the maximum potential calculator is a quick way, just mainly to get data, to get the client to move forward. Because the big takeaway is, for the most part, most clients are concerned about talking to an advisor because they don't want to change their lifestyle. They don't want a reduction in lifestyle in order to do what's good for them, and that is, saving more. So the maximum potential calculator is just a way to say, look, if we can, we're going to try to find the money through other losses that you have, and what does that look like if we can do it? Automobile purchases calculator, it could be any kind of expense. It's just that automobile is a large expense. In fact, it's a bigger expense than most people realize. They just, it's something that's kind of automatic. We've gotten to where cars are one of those things we just trade every 4 years or every 5 years, and we have no idea what kind of expense we have there. But with any expense, that's true. The main point to get across with the automobile expense calculator is really that paying cash has a cost. One of the things Nelson Nash says is we finance everything we buy. Whether we finance it with a bank or any other institution like that, or if we pay cash, we're still financing it, but we're really financing with our future assets. Okay, with the tax charts is something that's just in there. One of the things that happens for most clients, most of them don't understand that we have brackets for different amounts of tax. They get information from their CPA, and the CPA says, hey, because of my good work, you only paid 12% of your total income in tax last year. Well, people don't realize, they think all of their income's getting taxed at 12%, and they don't see, or 15%, or 17%, or 22%, or whatever it is, but they don't understand that there's different brackets that occur there. And really, everything we do, whether we increase our taxable income or decrease our taxable income, typically through a deferral or something along those lines, happens as last dollar. It doesn't matter what the percentage of the overall tax we paid, it's where we are at the margin. So the life insurance values tool is not really something that I use directly with a client. It is a place where we need to put all of the life insurance data from a life insurance illustration so that we can easily populate one of the other calculators with it. So it's really a behind the scenes tool to hold that life insurance data. And the calculators that really need that are the funding calculator, the asset flow calculator, the diversification calculator, the distribution calculator, and a little bit in the accumulation calculator and the qualified plan calculator. Yeah, to me, the funding calculator is one of the most powerful calculators in the suite of calculators. Like I said, it does use the life insurance values tool as the background for where it gets the information. But typically when we see a buy term and invest the difference type of strategy, and the idea is let's kind of break that down and take it apart. Instead, people don't like things in a negative fashion. So what we've done with the funding calculator is lift the life insurance values up to meet the other assets. So in other words, it's a way to take the life insurance values and be able to look at first what the internal rate of return is, and then what the taxable equivalent is, and then what the taxable equivalent is with term insurance, because the death benefit covers that. So it's really a way to equalize the field and show apples to apples on a comparison between that and another asset. Yeah, so the qualified plan calculator is just a way to really look at what goes on inside of the qualified plan with all of the fees, the taxation, the fact that it gets locked up. So a lot of those pieces, and also the ability, we take it a little bit further, as you'll see in the video, to look at what the return potentially is for the federal government, even though we're told that the federal government cannot invest in the marketplace. In a way, with qualified plans, that's kind of what they're doing. The borrowing strategy calculator is one that we kind of use to show the idea of banking. It's the idea of being an honest banker. And in that sense, what we mean is paying back an asset we take dollars out of to buy things with and paying it back at full market rates. That's a great way to be able to show that piece and what happens. The thing about the banking strategy is it doesn't take a life insurance policy to do banking. We can apply the strategy to a shoebox, and that's kind of what we try to illustrate there. Okay, so the real estate calculator is one we can use for several things. obviously straight up to calculate the returns on real estate. And what we found is most people out there have no idea what they're really making on their real estate. You know, they think it looks like a good idea when they first buy it, but they don't know what the returns really are. And so this is a tool that I'm surprised doesn't exist more out in the public that allows people to be able to test that, whether it be real estate professionals or people just dabbling in real estate. And we've also found that we can use that for analyzing a lease or some other equipment or those kind of things too that kind of really fit into the same category as real estate as far as the way the calculations go. And it also gives us the ability to calculate not just rental real estate, but also a personal home. Okay, so the loan analysis calculator allows us to analyze a loan. We can either just look at it directly, create an amortization table, which for people that take out a loan, whether it's a life insurance loan or anything else, with the flexibility we have in a life insurance loan, oftentimes people forget about being on a schedule to make those payments. So we could print out an amortization schedule that says, here, monthly you need to make this payment to your loan so that you pay it off in the amount of time that you said you were going to. And then ultimately, we also have the ability to compare two loans side by side and see which one might be best. So the diversification calculator is one that can be very simple or it can be taken to a large extreme. But the diversification calculator allows us to be able to compare an asset with life insurance and then have a total of both assets. So in practice, what we can do is we can have, let's say we had an asset and we wanted to shift dollars from that asset, either the interest off that asset or even do a pay down into a life insurance policy. The final column shows us what the accumulation of both assets are, as one of them is shifting to the life insurance. So both of them, the cash value, and then also what's going to go to the heirs is shown together. The distribution calculator is one that allows us to show distributions, and that seems pretty straightforward, but the real power in that calculator is to be able to show somebody that by having life insurance, we can open up or give permission to a different strategy on spending those assets in the future. Most people are caught up in the never spend principal piece, and then the financial institution are the one that really benefit from that because they're holding the large asset, while the individual who built all that money just gets the interest off of it. Whereas we have life insurance in place to replace that asset, it gives the individual the ability to do a pay down on that asset, knowing the life insurance will replace it for the heirs. The accumulation calculator is a catch-all. It's the kitchen sink, basically. So just about any asset that you can't fit into one of the other calculators, it will go in the accumulation calculator because we have the ability to open up a bunch of columns. Now, one of the things that happens with a calculator that has a ton of different columns in it for different pieces, costs, taxes, term insurance, all these different pieces, the downside is if you're working with a client and they don't have all those columns, then it gets confusing. So what this calculator does is it actually grows based on what we add to it in the form of a cost or a benefit. Okay, so the asset flow calculator is a new calculator to the software, relatively new, and it's an all-inclusive. There's dangers in that and the idea of a plan, because the problem with the plan is it will change. I mean, the only thing we'll guarantee is in 30 years, none of these numbers will look like this. But still, people want to know, look, with everything together, what path am I on? What potential might I have in income in the future? So this calculator coordinates all the assets, income, Social Security, everything into one calculator where you can see a summary. But the beauty of it is if you take it the right way, the idea is we will shift that trajectory as the environment shifts. And the main thing is not to lock clients up into assets that they can't move from, that they don't have options in. So that shows us a way that we can just look into the future and make sure that we're on track based on where the environment is today.